folks. Welcome to another of our live streams. Glad you could join us today. I hope everyone had a fantastic weekend and is looking forward to the week ahead. So what are we talking about today? We're going to be covering a recent study we did on smart building startups and the whole kind of ecosystem around smart building innovation. So while we're waiting for others to join, here are the subjects we're going to cover today. So we're going to just do a bit of an introduction, and importantly, we're going to talk about the scope, because that will help us define, what a startup is and exactly what we've been measuring and, all that kind of stuff around, because we're also talking about data in terms of how much investment's been made and what acquisitions have happened. So we'll cover that first. Then we're going to talk specifically about investments and all of the numbers from last year, the top line numbers, and what we think that means. Then we're going to talk about acquisition activity from last year, and then finally a little look at like what the strategic companies are doing in this space. And then finally, we can end with some questions or comments if you guys have any. So if you did have a question or a comment, what you can do is type it in the chat if you're on LinkedIn, or if you're on YouTube, it should be pretty obvious where that is, and I'll be able to pull that up at the end. We are, of course, recording the session. So you'll be able to share it with colleagues, and please spread the word, because that helps us out. And don't forget, you can subscribe to us not just on LinkedIn, but also on YouTube as well. And we have a full program of research and analysis through 2026. So I hope you can join us for that. So let's start with the introduction and scope. So we define a startup as a private company founded no earlier than 2014. So basically 10 years old or younger. And that is focused on commercial and industrial buildings. So it would obviously not be a subsidiary of a larger company or an acquisition of a larger company. And it's also generally financed by VC or private equity funding, but it doesn't have to be. This is our 8th analysis of startups and scale-ups, and again, it specifically referred or references operational and maintenance phase of commercial buildings, the life cycle of commercial buildings. So we do touch on a few other bits and pieces. I mean, you'll see that later. We're going to have a little bit on one slide on the design area and construction area of the commercial building life cycle. But the majority of what we're going to talk today about is the operation and maintenance phase of commercial building life cycle. And for those interested in all of the detail, the report that we've produced on this includes a spreadsheet which lists all of the startup acquisitions and investments that were made last year. And there's the charts and analysis that goes along with that. So if you are already an enterprise subscriber, you should have received all of that information already. So let's get on and look at some of the data. So as I said, based on that definition of what we think a startup is, and within the boundaries of commercial and industrial buildings in the operation and maintenance phase, we've identified 1,372 startups founded since 2014. And in total, now 554 of those firms have been acquired. And that goes back to 2014. 72 or 5% of those are closed or inactive. And I mentioned this last time we did this. We talked about this subject. Why is it only 5% of companies that are closed or inactive? The reality is that actually a significant number of those 554 acquisitions will have been companies heading towards closure or a fire sale anyway. So that headline of kind of like, oh, it's only 5% that are closed is not really the full story. And finally, 51% of companies are what we would consider to still be active, right? Trading and still operating. Again, what does active actually mean? You can be active and gaining a lot of traction, doing really well, growing really fast, or you can be active and just treading water and not growing. So yeah, that's something to consider. Okay. So those are the kind of like the headline numbers of how the market breaks down at the moment. Let's talk about investment. So the investment landscape for smart building startups, in our opinion, is changing dramatically at the moment. It really is a tough environment for those companies now trying to seek funding. But the funding tap has clearly not been turned off altogether, right? So what we saw was $6.5 billion invested across 281 rounds last year. That is only a 14% decrease in value and only a 5% decrease in volume from the year before, 2024. And in totality, over the last decade, we've seen over 55 billion US dollars invested. So what seems to be happening now is that investors are basically writing bigger checks to fewer companies. They're backing those companies that they think have solid fundamentals and not speculative bets. And what we're seeing, I think, is definitely a tightening. If we look, there's an example came up last week or the week before. Fifth Wall, one of the big investing companies in climate and real estate tech, has cut staff and also paused active fundraising. And they actually cited higher interest rates and the Trump's administration's climate policies as factors in that decision. And, in some respects, our numbers bear that out a little bit. If we look at the spread of startups geographically, we're seeing actually Europe now has overtaken the Americas in this space. So I think it's 581 startups that we count as based in Europe, compared to 563 in the Americas. And many of those European startups are the ones that are interested in decarbonization technology. So they're applying solutions and services for things like energy efficiency, HVAC optimization, sustainability, and grid interactive buildings. And finally, I should say that what we've noticed as well is that the average value of a seed and Series A funding rounds has increased. So I think that goes back to my point earlier about how investors are being more selective, right? So yes, they are investing, they're writing bigger checks, but it's to fewer companies. I think this is one of the most interesting findings from our research over the last few years. If we go back to 2016, we tracked 195 new startups that entered this space that year. And last year, 2025, we have counted 11. So, is this the flow of innovation into smart building technology being throttled? Now, I think to be clear, that number of 11 are the ones that we've found to date, and it's likely that will increase as we do more research and we find companies that hadn't come across our path before. But even if that number trebled, the trend, as you can see in this graph, is pretty obvious. We're seeing less and less businesses bringing new and innovative products and services to this market. So, in 5 years or so, will we see the consequences of this? Because I don't see this trend being reversed. I think some of the reasons for this, let's say compared to technology areas like artificial intelligence, robotics, yes, you can apply those to property technology and smart buildings, but it's sort of a less favorable area as the industry kind of offers founders, I would say, like a less or not such good return for their efforts, right? Valuations of AI and robotics companies are much higher than let's say smart building companies. I think of course other issues, and we've covered these in other podcasts we've done and in our research. There are other issues specific to the industry. Operational technology is by its nature not difficult. The market moves slower, and it takes longer to affect real change within the business. So, for example, one thing that sticks out is this real or perceived switching costs for buyers. In commercial property, that's high, and that leads to longer sales cycles. It's more difficult to gain traction, and also it places incumbents in a stronger position. So it doesn't create a great environment for younger companies. Let's take a look at acquisitions. So whilst investment down a bit, startup formation down a lot, acquisition activity is totally different. We've recorded 98 startup acquisitions in 2025. That's a 75% increase on 2024. And it's actually the highest annual total in the last decade. So since 2014, as I mentioned earlier, we've tracked 554 startups that have been acquired. And, barring some big event like, let's say, AI bubble bursting or something like that, we expect this trend of increased M&A to continue into this year. Maybe not at exactly the same rate, maybe a bit lower, but definitely to maintain this kind of rate of consolidation as we go forward this year. So what does this tell us? I think increased understanding that growth is not just about technology in this space. It's also about implementation capabilities. It's about partnerships. It's about industry connections. They're all crucial, right? And I think non-organic growth is seen as definitely a way to acquire some of those skills, some of those not just bolt-on acquisitions. As I said, that's what the numbers look like. So 98 last year, 75% increase on 2024, and the highest that we've recorded for the last 10 years. Those previous highs of 2021 and 2022 have been exceeded. So I said we'd talk a little bit about strategics, both from an investment perspective and also from an acquisition perspective. So first, in terms of investments, last year we saw that about 23% of all investments involved a major player in the smart building space. And often these strategic kind of relationships and investments are a precursor to acquisition. Strategic buyers are often, move from like a minority stake to co-development, partnership, acquisition, and platform consolidation. And I think we can expect the consolidation trend to continue, and I think these strategic stakeholders, across the building life cycle, are going to continue to augment their portfolios, and they're going to continue to look at acquiring digital solutions for facility operations. And to kind of help me prove this point, last week, Train Technologies released their annual numbers for last year. You can see here, this is a slide from their presentation. In 2025, they committed 720 million, or approximately 720 million, to M&A investments. And their plan this year is to deploy between 2 and 2.5 billion to M&A investment. So that's a significant increase. We'll see how that plays out. Like, I don't think it's going to just be them that is looking to increase their level of growth and deployment of capital in this area. So, as I said at the start, I thought we would just finish off a little bit on the building life cycle, right, from architectural, engineering, construction through to operations, and how AI is looking at reshaping the building life cycle. I came across a report by a company called Bluebeam, and they said that only 27% of architectural, engineering, construction firms are currently using AI. But the critical number, 94% of those firms plan to increase their AI investment this year. And I think strategic buyers are really paying attention. They're all actively looking at repositioning their portfolios around AI capabilities. And we've seen some big acquisitions last year in that area. So part 2 of this research that we've just published looks at startups that are applying digital twin and AI technologies across the life cycle, from architecture, engineering, construction through to operations. And we profiled about 84 startups and 52 that are focused on AI applications and 32 on digital twin technology. And we selected 20 of those startups for further analysis, and they're the ones that you can see here on this slide. And I think it's a super interesting space, and I think there's been a lot of talk for years around the golden thread of information through the building life cycle. That we can create a digital model when we design, engineer, and construct the building, and then that can live with the building as it operates and can be used as it goes on into time. Whether AI is going to be a catalyst to really push that forward, I think a lot of people think so, and we're seeing some investment in that, and we're seeing companies really take that on. So, thanks very much, guys. I just want a few bits to finish off. As I said, this report's available now. If you want more information, you can scan that QR code and you can read more about it there. Also, why not consider subscribing to Memory? You can do that either as an individual or as an enterprise. The individual subscription, that's for basically individual observers who want to stay informed about what's happening, important developments like acquisitions, big investments, strategy of some of the bigger companies. So you get access to all of the things that all of the notes that we write on the website. An enterprise subscription, that's for companies who want all of our information that we publish to make the right decision at the right time. So you can contact me if you want more details about that. We also provide advisory services. So if you're interested in market intelligence, something specific that you need for your strategy and decision making, then again, contact us about that. Or, if you're doing some transaction, you want help with understanding what the market landscape looks like, potentially identifying acquisitions and targets, then again, that's something we can do. You can reach out to us about that as well. All right. Well, thanks for listening. I'll have a quick look now, see if we can find any questions. 1 second. If you do have a question, now is the perfect time to ask. Okay, well, I'll come back to that in a second. I'll just finish off first by saying, of course, thanks for listening. If, we've recorded this, so we'll be going up on LinkedIn straight away. But I will also be posting about with some more details and some of the notes from this conversation tomorrow as well. And please spread the word. Like, if you think this is interesting for a colleague, then feel free to share it with them. If you have some specific questions, then you can always message us and email us, support@memory.com. We're happy to take that on board. Yeah, okay. Max has a question here. Who are the strategic buyers? So, well, I showed a slide from one. That would be Train Technologies. But of course, if you think about some of the major building automation companies, Honeywell, Siemens, Schneider Electric, I mentioned Train, Carrier. Those are some of those in the technology space, but also I'm thinking about some of the big property companies as well, like JLL, CBRE. Those are what I would consider to be the strategic buyers who are building out, creating a technology portfolio, building that out. I hope that answers your question. It kind of does extend a little bit further as well. You could also think about, we showed it there, some of the AEC companies as well. So there's some examples of, I think, what was the one we saw last year? AECOM purchased a AI company in the AEC space as well. So that's an example of a strategic acquisition. Okay, if there aren't any more comments, then one more, sorry. Or investors, so mostly infrastructure guys or facility management companies. Yeah, that's more or less where we are, but not just, right? For example, also you could add IT companies to that as well. Okay. Well, as I said, any more questions, you can type them in and I can answer them later as well. Thanks for listening, guys. Appreciate the comments. Thanks, Max. If you want more information, reach out to us. Bye for now.